is Harris. Um, I want to talk about looking for entry on the lower time frame and through confirmations. Sometimes we just do the analysis, we just lead the market, we just place limit order without knowing what is happening. The market can possibly break your level, and it's a very good thing to seek your lower time frame confirmations before you take your entry. And what are the things you need to do? You need to switch from the higher time frame. Maybe you're analyzing from 1 hour time frame, then you go to things like 30 minutes, 15 minutes, depending on what you use. But sometimes I even I even refine my entry to the 1 minute time frame or sometimes 5 minute time frame to get the best snapper entry and your stop loss and a very tight stop loss because that is the main thing. Your risk management is the main thing in the market. So, like as you can see on this US oil, so the reason why I'm posting this, the reason why I said okay, we're gonna buy. I've been watching US oil for like a week. I'm watching it. So I saw a demand level here. Then I saw a week high here, a week high. So I saw a week high there. So this is a change of structure. Possibly we can call it a resistance field. Resistance becomes support. So if we are looking to take this entry from here, from this place, then we should be looking for the market to give us something like this. Okay, this is our demand level. So we should be expecting the market. We are trying to go long from here. We should be expecting the market to either do something like this, then induce early buyers and come like this, then we can have something like this, and we shoot up. So why do we want to get something like this? Because um, prevention, this place can be a break of structure at the lower time frame, and meaning there will be there will be something like a demand level here. So you can just have something like a full mitigation, then a spike up, then the spiking will give us a demand at this level, which so if you are taking your first entry, which is not the confirmation entry, which is the aggressive entry, if you are taking your first entry from here, which is the aggressive entry from here, then your second entry, your re-entry should be from so possibly here should be another block left behind from the impulsive candle that moves up. So you should be looking to go long or have another re-entry from here, maybe from the open of the candle. Then your stop loss below the candle or at your entry price. So initially, even here, you can be on break even on your first entry. Maybe you are targeting, let's say this area here, for example. So you can even be on break even. You can be on break even on your first entry. But I don't break even when the market doesn't break structure, or only when I see that the market is not going to exploit what I'm looking for. So this is what we call confirmation entry. This is an aggressive entry. The market came down. So this market can probably do like this, then break this zone. But since it gives us a weak rejection and maybe candle formations, and we see a shoot up, impulsive move, then giving us another block below it, then we should be looking to go long from there. So that is for the confirmation entry, or maybe you are looking to short something like this. Let's say we are looking to short from an area here. So the market is coming. You can probably be looking for liquidities below your entry. So what the market does do, the market will just clear early buyers So after clearing early buyers, then you should be looking for a confirmation inside your zone. So if you are taking an aggressive entry, you should be taking it from here, maybe from the open of the candle of the other block, or we can call it supply level. Then your stop loss, either below the wick or the close of the candle, depending on. But remember, when you have a demand level that has a long wick, you have to possibly look after the wick, because if you don't look after the wick, the market can just wick you out before going to your direction. So that is what you really need to know about the market. Then if you are looking for your confirmation entry, maybe you want to shift to the lower time frame, then you can probably see something like this. And it may break structure to the upside, then leaving another block below them. So that other block will be where you are looking to enter as your confirmation entry, not your aggressive entry anymore. Because aggressive entry can break depending on the fundamentals back in the market. So whenever you are taking an entry, you must know the fundamentals behind that trade. There's always fundamental behind each market. So it is very good for you to know the best fundamental behind your market. So like this now, for me to take this US oil, so why am I taking it? I saw um, a support level here broken, then retested, then dropped. So here we didn't see clearly close of candles to show that this market is going to continue downward. So this is a level of demand, but I refined it to the lower time frame. So that's why I have little demand below it. So this market gave us something like a breakout. Probably prevention, if this is a fake out, this market will fake out, then come here, then range, then drop. But this market kept on going up. So if you are looking for demand levels or supply, I mean the supply levels above, you can probably look at this small supply here. So there's possibility that this market is going to react to this level because we have imbalance below here. Then we have weak high, which is like a liquidity, or we can say trend line liquidity here. You can probably say trend line liquidity around this area or here. You can say here to here. So we have the trend line liquidity there. So the market will surely clear this liquidity, then react to this level. Then if you are looking to go short from here to this, if you are looking to go short from this level to this level, so you have to seek your confirmation like, okay, we have liquidity that makes this market valid, and we have imbalance that makes this sell valid. So you'll be looking for the market to come, then create you something like this. So we can probably say it's a W pattern or head and shoulder pattern, whatever you call it, and shoot to this side. So this area will surely give you another block here, another block, maybe from the open of the candle or the low or the middle of the candle, whatever it may be. So you see that this market is, yeah, ready to go. So you should probably see a break of structure, yeah. So some people call it inverse head and shoulder. I mean head and shoulder pattern. It's still the same thing. We're still talking of same thing, but you don't have to trade head and shoulder pattern without having other block there. So this place I'm looking at the resistance here. Then below that resistance we have demand level there. So which make it valid for us to give it back. Then we have this imbalance here. We have this imbalance here. Even looking at our trend line, if you have to make use of our trend line, this is a trend line liquidity that has been wiped off. So we should probably be looking that the trend line is going to work for us as a support there. So as a support for people that trade trend line. So something like this. But I don't trade trend line. I don't trade. So this is just to just see that okay, this market is going to react from this area. So probably for me to go long here, I'll be looking for confirmations. I won't just take my entry blindly. Maybe we have liquidity here, we have equal low around this place. So I will be looking for this market to just create something for me like this and drop in. I may not take the first entry, so it may break structure like this. Then I'll just be looking to take my entry from the next other block that I'm seeing there, and we continue to the upside. So I'll look for the other block that formed around this area here to go long. So I'll look for the other block that formed around this area before I can go long. So that is about about looking for your local your lower time frame confirmations before you can go long. And one thing about the market is that I want to show you one how to trade supply level that is very valid. We have a lot of sometimes we may have a lot of supply zones or demand zones, but how can you potentially look at the one that will work for you? Sometimes I use my Fibonacci retracement, my fib, to probably look at what is going on. Let's say this is the highest point this market get to here and started coming down. So why didn't I go off all these demand level here? Because I want to buy the discount price, then set the premium. So this is my 0.61 fib and 0.79 fib level. So I should be looking for my best entry between these zones. You don't have to trade Fibonacci retracement blindly. You have to look for your entry, then you just use this fib is just for your measurements to know the discount price and the premium price so that you won't just buy the 50%. Anything can work in the market based on the confluences or the fundamentals that back it up as at that time or anything. But basically, on fundamentals, you just have to look at the entry criteria you need before you can enter the market. You cannot take all market. Don't FOMO. When the market does not come to you, leave it alone. It is better you don't trade and you trade and lose your money. That is the fact about the financial market. It is better to stay off than you trade the market and lose the market. So losing money is very bad in the market. So this is my level here that I'll be looking at. For people that are trading in fib, possibly some may be looking to enter in this place, then their stop loss right there. I'm not going to put my stop loss because all these areas they are rallies. So the market was not ready here. I don't expect this market to respect these places coming down. But before I go long on this, my demand level below this resistance becomes support. So I'll be looking for the market to give me a confirmation inside this my zone. Then I'll be taking the re-entry level for my level. So that is how to trade supply and demand level. So you have to see, but in some areas, I want to share you one secret in the market. So whenever you have, maybe you want to trade the London Open, then the market, okay, let's say for example, this is what I've traded in the market and it has been working for me. But most times I don't map it out for people. I just see it and so let's say this is your demand level that you're looking to go short. This is your demand level, then you have a lot of liquidities and so many. Let me just try to form it. So this is your demand level. We have maybe something like a liquidity trend line. So this is our liquidity trend line. So the market is coming down and so many other. So the market has been. So the market is coming up like this. So the market got to an area here during the Asian session. So the Asian session gives you something like this, or any pattern that the Asian session gives. One thing you need to know is that the market will surely manipulate the Asia session during the New York section. That is what you need to know. Either they manipulate the high or the low of the market. In some areas, the market can manipulate the high and manipulate the low before going to the main direction. But you need to know the direction of the market so you can know where the market will surely manipulate, then tap into the initial movement area whereby the market movement will be engineered. That is what you need to know about it. Sorry, I'm having a call. So this is, let's say this is an Asian section high. So we'll be looking for the market to come into this level here. This is, let's map this out as our Asian section. You need to look at the Asian session very well. Asian session is very important. So this is our Asian session. So we'll be looking for the market to take out the high. So that's why I put it in capital. So we'll be looking for it to take the high. So once it took the high of the Asian session, so immediately what we do is we look for a entry from the supply zone that we have in there. So immediately this area here will not give us, we don't need to wait for any confirmation or something, because the market will just what will just spike down immediately. After taking out the section, it will just spike down. Then maybe you are looking for then you continue to look for your, I mean, your target. So this market doesn't mean when you see Asia high below your entry or above your entry, I mean below your area or anyhow it is. So you need to look for the taking out of the Asian section. You know this market is going in the said direction and is giving you Asian high. So meaning that you should be looking for, you should be waiting patiently for that market to create to take that high and tap into your level before engineering the initial movement. So this is what I've traded. I can probably show you on USD card. It is USD card, yeah. I have the trade on USD card. I I think I no, I didn't post it, but I posted the re-entry on my group. Uh, I think some months ago. Yeah. So yeah, this is the entry here. So initially we are looking at, okay, this market is breaking structure, breaking structure, breaking structure. So we're looking for a sell. So we have this other block level here. We have this other block level here. So this is the high that we have. Then we have this market coming up, coming back up, coming back, coming back to our level in which we want to short. So you can see that this market is not really healthy, it's not really healthy. So on this area we have the high. There's on high we have here. Um, I probably want to figure out. I think it's on a lower time frame, yeah. Yeah, it's on a lower time frame. Yeah, this is the high of the Asia. This is the Asian session that we have there, and the high of the Asian session. So this is the Asian session that we have here, and the market keep rallying and keep struggling, ranging. So this is a weak high that we already know. We've already mapped out our uh, supply level that we want to take. So we have our other block there. So this market manipulated this area with just one single candle within 2 hours, one single candle. Then what happened? The market start giving us reaction that this market is going to sell. So we probably have another other block there to take our short into them. Our stop loss above the, so can take it from the open. I love taking from the open then. Your stop loss, your stop loss above. Uh, so we'll be looking for this week low here. So we'll be looking for this week low here. But most times I love to give my entry little space. So we'll be looking to go short from there. So what did this market do? This is a weak low, this is a weak low. So we have liquidities below this entry, we have liquidities below this entry. So even here we have this Asian high here, we have trend line liquidity. This took some days. So we have this trend line liquidity here. We have trend line, we have equal high there. So we have this Asian session there. So those are the things I've built on myself. Watching the chart, the time you spend on the chart will give you more version of what you probably forecast and see in the future. Let me just do this. So we have this high, this Asian high here. So we have this Asian high and this high. So we already know this is a liquidity area. So this market seems like it has taken liquidity, but no, because it is Asian high. So what happened? The market spike up, then immediately without looking for any confirmation started dropping. So this is the next other block that we have here, and we have liquidity trend line there. So after eating out the liquidity trend line, it took out and tapped into the next supply level that is there and started dropping. So now we are looking at all this area should not hold. All this area should not hold. They will surely affect the market, but they will not hold. So I'm looking at trend line liquidity, equal highs, then for this market, if this market can probably come down before shooting up, man, and give us clear reaction there before going up, that will be a swing setup for us on the USD card. So one thing you need to know is always look for uh, always look for Asian high below your entry. So Asian high below your entry. So and any market will surely manipulate Asian high or Asian low depending on the direction you are looking to take. So that is what you need to know. And that is all about confirmation entry, looking for the lower time frame before taking your entry. So if you have any other thing you want to learn about the market, um, I only want to do videos on on what people ask for. Then our next video will be on how you can probably manage your money. It's not all about I want to make money, 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 I want to become a billionaire tomorrow, I want to do this. No. So what you need to do is calculate your risk, calculate what you are risking in the market. Okay, can I lose, if I lose 10 times, will I still be able to recover with 2 or 3 trades if I win it? So those are the things we need to look at. All these things have happened to me a lot when I started trading. No trading plan, no trading journal, nothing. But you must have your trading plan. Sometimes when the market is not making sense to you, you have to leave it. But when the market is making sense to you, you take it and you apply your risk management. Don't think you want to buy car tomorrow, you want to become a millionaire tomorrow. Sure, you will surely be, but it takes time. So consistency, when you do it consistently, and when you are reading books, you have to take out, even though you don't even trade, you can just be on your computer making analysis, looking at the market is being played out, looking at the price action. So that can give you more courage to take a live funded account or so many things. So I hope I've done a lot for this local confirmation, those lower confirmation and taking the best entry as smart money trader. See you in the next video.